Okay, hello everyone. Sorry for the delay there. Welcome to this live intraday strategy session on SB Trade Desk. Michael Boutros here with you. Petro, thanks for the all clear on the AV. Good to see you everyone in the room. Lots to talk about. What on the aftermath of yesterday's move. Some nice moves here in the dollar yen that the swing trades are catching as well here. We did just get, guys, a quick release on the weekly jobs claims in the United States. I do want to give you an update on that as well. Here's what that release just looked like just a couple of minutes ago. A little bit of a beat there as far as the continuing claims coming in at 2417. Initial jobs claims 291, slightly better than the expected 293. A little upward revision last month, or last week rather. Nothing major here. So we want to go over the scalps that we've been following on the intraday page. Again, on the back of yesterday's release. Listen, it was an awesome release from Yellen. It's textbook, classical central bank behavior. She did a great job of playing both sides of the coin. She removed the patience language. We still got the dollar to give us a little bit of a pullback here, subdued. Remember, the biggest concern I was looking into this was if they were coming out anywhat hawkish or constructive. A continuation or push higher in expectations for interest rates would have blown out this dollar rally even more so. So she played both sides of the coin perfectly. Equities rallied. Markets are still interpreting that the Fed is going to take its time on the pace of the normalization process. And as such, you saw equities continue to rally. At the same time, the dollar took a little bit of break here. So where we go from here is kind of the objective of the webinar. So let's jump into some price action. A quick update before we jump in on what the relative performance looks like so far in this session. Here's what we're looking at. So the dollar is actually weaker against some of its major counterparts here. You got the yen down 0.66. This is a one-day single ranking against the dollar, percent returns. Obviously, the euro down 1.92%, Aussie down 1.6%. So you're seeing that despite what we saw yesterday, people are pretty comfortable fading that pullback. Mike, the screen keeps flashing different pics. Oh, guys, are you still seeing that problem? Hold on one sec. I'm sorry about that. Bear with me one moment, guys. Okay, that should resolve it. Please let me know if that keeps happening, guys. I apologize about that. So for the dollar, obviously, it came to a perfect area of support. This is the chart that you've seen on SB for the last couple of weeks. Look at that, guys. You can't make that stuff up. So the same exact support region that has called the last, essentially, 3 rebounds off of this level here. And not only that, it was also the opening range high for February as well as the 2009 stretch highs, all coming right into a nice area of support for the bounce. So we're not going to go full-on continuation yet. Our subject here is near-term trading. Here are the scalps that we've been focused on. It's still outside the dollar, believe it or not. I'm still focused on these sterling crosses. They've continued to bear a lot of fruit. Sterling CAD yesterday, a beautiful play. I'm going to go over this, guys, with you on the 5-minute. I don't know if you saw me messing around earlier before we started the webinar here, but some beautiful triggers here. Sterling Oz also offered some nice play. The third scalp on here, guys, sterling yen, actually is my least favorite at this point. This was the beautiful trade that we had last week. Obviously, on the swing side, they got the whole run to the downside. On the rebound here, really nice break that did pop right back into the 79 level that we were talking about during the webinar. But a false break-in overnight, and we'll go over this in a moment. A false break-in overnight actually faked would have been a nice little fake out, not a nice fake out, but would have been a fake out for the short side of that trade. So a side note, again, the last 2 setups here that I'm going to go over actually played out beautifully in European trade. You guys are still getting some really nice plays on that front. So let's just jump right in. Sterling CAD, first things first. So a quick review of the daily chart. As always, guys, the scalp chart has, or the scalp page has the daily, the scale, and the 30-minute updated each day. So I kind of always will track the progress, of what the daily chart's doing. So we just noted yesterday that this 87.04 is not the actual, it's the stretch low, literally, but it completes an exact 618 extension off the high. That's something I want to pay attention to. And I also noted in the report, you don't want to underestimate the value of 86.68. It's a pretty big level. It's the gap open that we made here on the 26th of January. It's also the 2014 stretch high to the pip. Okay, so it's also going to be a major level of support if we were to break down below that. Long story short, off that rebound yesterday on the intraday charts, there was a lot of reason for us to start looking higher. And if you saw in the report yesterday, we're basically looking for long triggers above that key region of support that we had marked between those slope lines. So coming into the open of your Asia session, essentially, this thing was coming right back into the 88 level and pulled off. I do want to take a moment and show you what the 5-minute trigger looked like on this, because there's a couple of ways you can play this, guys. And when we talk about triggers here, I just want to clarify. I've been getting some questions from you guys via email, really, really genius questions that I want to address here in the webinar. I think it's going to help everyone out. So you're right. When we're looking at 30-minute charts, the delay in the trigger can be very painful, okay, because what it does is it skews your risk to reward, because by the time the trigger gives out in the 30-minute chart, your stop has to be, somewhere in the range of 44 to 50 pips. I'm never going to advocate taking a less than 1-to-1 risk to reward, but sometimes when the market's on the move, guys, or there's clear conviction, you have to go with the conviction trigger. So the trigger here, correct, would have been this break above 88. Why? This is the opening range high for Asia, okay, or for the Asia session. Also, this was going to clear the highs that you made in momentum. So you finally got a 3-point trigger that gave out. A stop against the low is pretty stretched here, right? It's basically a 1-to-1 trade. 88, you had to have your stop against the lows, basically 50 pips off. It ran well over 100 pips, but we're scalping, so we're only looking for about 45, 50 pips. That was the hard trigger to take on a 30-minute. But this is just here for conviction. When we're looking to actually execute trade by trade, guys, you have to be something tighter time frame. And this is where the 5-minute chart comes in. So here's the 5-minute chart for yesterday's Sterling CAD play, right? The trigger actually came on the pullback, and you use the trigger on the 30-minute to give you the conviction to hold that position, maybe to start trimming off on the break after you achieve the first quarterly ATR, something to that degree. But as we came into this key support region, this was the slope that we were fighting against. We're looking for long triggers, right? 5-minute comes into play. On the pullback, momentum finding support at 30 on the 30-minute chart. Even on the 5-minute chart, really struggling to break, that 40 level rather, in momentum. Trigger break to the upside initially puts you in long against the lows. As you're breaking the opening range highs now, the trigger is giving out in the 30-minute. That's your conviction to hold on the position. There's a lot of times where you'll jump into a position, guys, and the scalp will start to move against you, or a 5-minute chart or a 5-minute trigger will go against you. It's okay to take that loss. If you're shy and you're someone who doesn't like taking little tidbit losses, nicks 10, 15 pips here and there, or especially on a trade like this, even 20 pip stops, it's probably going to be a strategy you're going to want to be very, very nimble with, okay? You have to be able to just scratch that trade or nick it if you get a clear conviction trigger against your bias. So something like this where you're coming into support, momentum is holding 30, or 40 rather. You're looking at the 30-minute chart. That momentum just saw another strong hold at 40 and a rebound. Ahead of the break of the trigger here, that's what would have put us long on the 5-minute chart. Does this make sense, guys? Is this helping? Now, it doesn't hurt to add some basic indicators on a 5-minute chart. I try to keep it naked because on the 5-minute chart, I'm purely focused on price action. The trade sessions indicator is still something I definitely will bring up. And if we add that to the picture here, guys, it adds further clarity. Okay, look at the Tokyo Open. It's in blue. The trigger gave out. Your initial target, even if you're playing this on a scalp on an intra-session basis, is the Tokyo opening range high. That's 88.10. Your trigger was at 87.69, 87.70 here. Okay? So right into this level, you're bringing your stops to break even, maybe taking a quarter off the trade. Once that gives out above 88, you're already in the core position. So now you're waiting for the full stretch of the 45, 50 pip ATR. Your stops are at break even. You're looking at the 30-minute chart. Wait, that just gave out too. Now I'm on a conviction scalp on the long side. Does that make sense, guys? I want to make sure everyone's on the same page as far as how we're entering these positions. Because, again, last night, we had a really good opportunity. I was personally looking for a dip back into that key region. We didn't get it. Doesn't matter, though. You got the conviction hold at 40 momentum telling you not to be on the short side. You got the initial break on the 5-minute, and then the subsequent break here that gave you the conviction to hold the long side of the trade. So I just kind of wanted to walk you through that. This is like literally how I trade, guys. It's the 30-minute chart I show you guys is what I'm watching as far as what I'm targeting on the levels. And then I'm just watching this. We're going to be dynamic. We're going to look for divergence. We're going to go throw on some triggers both in price action and momentum. And this is what the operative, buy, sell, click trigger will be. This is where the conviction happens, and this is where we sit and sort of adjust our position according to what the broader time frame is doing. All right, so a quick look there at Sterling CAD. I can't control the time of day that these things play out, so again, I hope you guys, if you're waking up early enough or if you're on the European side, you're getting some beautiful, beautiful plays. So heading into the U.S. session, what are we looking at right now on Sterling CAD? Well, it played out exactly like we were looking at last night. So essentially, this region here of resistance is what we're testing right now, 89.05. As we said, that's going to be the bearish invalidation level right now. So if we do make it through this, you're looking at a basic trendline break from the highs. Nothing fancy, right? And a basic confluence with a 236 retracement of that same move. Keep it simple. Okay? As far as a top side trigger to put us on the long side of the trade from these levels, listen, I'm going to need the U.S. opening range to give us a base to trade against. So we're just opening up that range right now. If we set a low somewhere near 88.50, it would actually be really nice with the pivot here just in price. Here's the Sunday open. Here's your Monday lows for U.S. trade. So it would be sort of a nice area to find the U.S. opening range low. A topside break above 89. You're essentially looking for a scratch into the opening range high for the week. And that puts you into 89.60. Okay. On the 5-minute, I guess we might as well check that out. There's not many triggers on the shorts. I'm going to see if this is going to materialize into something if we hold into the U.S. opening range. Near term might be something worth looking at. Okay. Again, something to keep into mind, guys. This is a wide range scalp. 45 pips per scalp should suffice. It's not like the majors where we're looking for 20, 25 pips per scalp. So you have that flexibility. And again, I want to encourage you guys to be dynamic with your leverage. It's part of this strategy is really going a little bit heavier on conviction scalps that are going with the trend and just being lighter when you're trying to play counter trend moves here. But the operative play, just to put things sort of on a wider scale, is where we are in broader price, right? Here's the formation that we're in. And again, this, as long as you stay above that median line range there, you could see this thing travel a little bit higher here for Sterling CAD. Eileen, some comments here, says, good morning, Michael. Thanks for the recording from FOMC. Was with a client closing. It saved me from chasing all over the place. Yeah, no worries, Eileen. I hope you enjoyed that. Pooja, great to see you. Good morning. Eileen says, anyone else having video flashing? Okay, I got that taken care of. Brian, great to see you. Eileen says, yes, helps going over more of the 5-minute entries. And we'll do that, guys. If you find that helpful, feel free. I want to keep these webinars as fruitful as possible. Chintan, great to see you as well. Petra says, I see you also have pivots. Do you use them for confirmation? I had a little bit of a discussion with you guys on pivots early in the week. My take on pivots is they tend to mean more to me when they confluence with something else of a technical factor. So Petro, if the pivot comes in with the opening range high for Asia, like it did last night here in Tokyo, if a pivot overlaps with a longer-term Fibonacci level or basic trendline resistance or support, if a pivot comes in on a longer-term moving average, 150-day moving average, those are when pivots matter to me. Pivots are very objective ways of looking at price action, and as I said earlier in the week, guys, when we talked about this, for me personally, a pivot is going to be most powerful, most effective in futures and equities, because you're looking at the open close, and that's really what you're stressing. Where in currencies, that open close, it is at 5 o'clock. That's what we use as a standard, but it's a little bit more subjective in a 24-hour market. So I don't put as much emphasis on pivots here as much as I did on the futures desk, right? Or in equities. That's what I'll say on pivots, Petro. Other than that, just to put you for where my mindset is on pivots, they can help. I don't stress them. And I'll never take a trade based on a pivot. But if a pivot's on an opening range high or on a fib, you know what? That might give me a little bit even more so of a rebound or a break. Petro, does that make sense? Take it with a grain of salt, okay? I don't want to stress the pivot. He said, I got it. I remember the discussion. Thank you. Gotcha. Pooja says, 5-minute chart review are very helpful. A small question. If a 5-minute resistance trigger gives out and the RSI is above 60 already, would you reduce the leverage or rethink the long trade? If a 5-minute resistance trigger gives out and RSI is above 60 already, would you reduce leverage or rethink the long trade? Pooja, do you mean if you get a long trigger above 60? Is that what you're asking? Or if you get a short trigger above 60? Yes, a long trigger above 60. Okay. No, there's nothing wrong with that, Pooja. Guys, remember, if the momentum signature is up here, your popular conception and what you'll read in books and what you read in all these training courses is this is where you would be looking to sell because the market's in overbought condition. I want you to take that notion and throw it right out the window. Just completely dump that notion. This means that the momentum has reached a point where this is how much force is behind it. And don't take my word for it, guys. My word means nothing. Look at price action. In fact, it's the 60 break here that actually saw the biggest stretch of the move while you were above 60. So I shouldn't be afraid to take long triggers here. This is where the market's got the most steam, right? Now, the other side of that question, Pooja, is it when it breaks 60, that is a concern, especially here. Again, this was a beautiful trigger. I missed 5 in the morning here in the United States. But, guys, this would have put me out of the long side. Why? Divergence into the highs, as minor as it is. Bring it into a line chart so you can see it. Ooh. Without the extremes, right? Divergence into the highs, and then a 60 break in momentum. That would have taken me out of the long trade. Okay? So it's not something to shy away from. While the oscillator's up here, this is when the market has enough steam. It's the breaks below these key levels that we're looking at. So if this thing was to turn below 70, or if it was to break below 60, below 50, these are triggers that would keep me off of the long trade, or at least having me bringing my stop, Pooja, and taking some off the table. Good question, Pooja. Does that make sense? She says, okay, thanks. Now, don't get me wrong. The only thing I do want to say is I will never take a long trigger above 70. That's a different ball game because now you're looking at something that's a little bit more stretched, and the continuation, or the turn rather, is almost impossible to call because it can stay above 70 for a day, a month, a year, a decade. It can stay there for as long as it wants, and it can come back just as quick. So when things are in overbought here, this is where no triggers are taking. This is where no triggers are taken, right? In fact, one thing I do want to note is the closer the triggers are to 50, typically, the better the conviction is. Okay? So a trigger break here would be a conviction trigger. This trigger break, in my humble opinion, was a conviction trigger. The closer they are to 50, the median, actually the stronger the signal becomes. Good questions. Good questions. So that's Sterling CAD. I think we've exhausted this one enough. Watch near-term resistance 89.05. That's my level to watch. That was yesterday's high. Is a basic 236 trendline resistance. If you get through that, again, you just asked that question, right? It's going to depend to see what momentum is doing on the 30-minute. On the 5-minute, We'll see if this trigger pans out. Sort of the ideal scenario is this thing kind of holds into 930, and then you get the trigger break with a break above the New York opening range, which puts you above 89. That would be a long scalp against 88.60 here, looking for, obviously stretch into like 89.60. If the momentum gives out and we get the trigger break in momentum and we get a break of the U.S. opening range low, look for a pullback. You might have a nice 90 pip drop into 88 in that type of scenario. So I'm kind of waiting to see how we open up the U.S. range. I'm going to keep an eye on this one here. London opening range high is the same exact high that we're putting in so far for U.S., just below 89.05. Watch that region. We could still probably press into a new high before we want to call that break. Tom says, I just realized you have two market scope platforms open, one with a daily chart and a 30-minute chart, and one with a 5-minute chart. Is that correct? Yeah, it's 3 actually, Tom. 2 for charts on demos, and then the one live chart, which is the 5-minute charts you guys are looking at here. That's the operative one that I'm actually trading off of. Petro says, this is a webinar that you should add to the resources. Nice details for the strategy. Hey, Petra, I'm more than willing to do that, guys. It's your service. We'll cater to what you guys find helpful. If there's enough consensus in the room, we'll definitely keep this on tap. All right, moving right along. Sterling Oz. Another beautiful play. What can we say about this? 92 was the level to watch. We know we probed deep into it yesterday, but we're never going to sit there and hold tip by tip here, guys, on a scalp when we're going into event risk. So the operative play here, and it's interesting because you actually didn't get many closes below it. There's only 1 or 2 candles that actually closed just below the 91.85, 92 key support zone that we've been watching here for Sterling Oz. The point being is the same setup as Sterling CAD, guys. You're looking for long triggers above a key support structure. The breakdown, risk was clear because you're at support. So as far as your invalidation level, Sterling Oz was at invalidation, Sterling CAD was invalidation. So on those type of scalps, guys, you're just looking for the long trigger. And I tried to make that as clear as possible while above this region. If 92 gives out, 91.85 specifically, just basically look for 190. Okay, you're looking for the lower median line parallel. Huge fib cluster here of significant levels as well. That being said, you're looking for long triggers above this region. Okay, here's what Sterling Oz look like. Well, let's start on the daily, and then we'll drill down. Here's Sterling Oz. So that key support structure, 91.85 into 92. On the daily chart, it even highlights into 92.20, which is a longer dated 38.2, but we're not going to stress that. The point being, look at the symmetry here, guys. Perfect symmetry. Okay, overshot a little bit, but again, Fed can do that, right? What I don't like is that the fact that momentum is just randomly turning here at 45, but I'm not going to stress that. The point being is, again, we were looking for long triggers while above this level. Initial resistance is being hit right now. It's that median line backed by that 91.57 level, which is actually the low day close, which was intact until yesterday broke. Okay, it's also the weekly opening range high. Okay, 94.57, I want to say. Where's my? Yes, 94.57. Okay, so that's the near-term resistance level you're looking at. Again, the high for the week actually comes in at 94.67, a couple pips away, but you get the picture. Okay, and this break here would validate a near-term reversal in price off of this support. And you look for the topside targets, which we'll show you in a second on the intraday chart. One thing I want to note, momentum is coming to 50 here, but there is some room before that 3-point trigger actually gets challenged. So wouldn't be surprised to see this thing continue to press higher here into US. Let's jump into the intraday. Sterling Oz on the 30-minute. Okay, so again, there was that support, there was that resistance region that we highlighted yesterday in the report, looking for long triggers. There was the long trigger that we highlighted right there. You got the break. It happened in early European trade with a move above 93.20. Boom, we went right through that level. We're checking it now. If we break these highs, guys, again, next topside objective, I do want to be mindful of the weekly high, which is 94.66 or so. but essentially you're looking for the 95 handle to complete a 50% retracement. Okay? Remember, these pivot zones are here for a reason, and especially when the market has given us clear-cut conviction on them before, we want to make sure that we're watching that very closely. This becomes the new bullish invalidation level. Okay, so the bottom of that zone comes in right around 93.60. Looking for long triggers as long as we hold above this. Now, I'm not going to validate this as a break yet because, again, we're just putting in the U.S. opening range. Momentum is at 70. You haven't cleared yesterday's high yet, so don't get so excited about this just yet. But the premise of this is, as we open the U.S. session, if the session opening range breaks and we hold that low, you're looking for that stretch into 95, 94, 97. Okay? As far as the short triggers are concerned at this point, that's a 3-point trigger right there. Take you at a long exposure and also possibly open a short depending on where price is if this breaks, especially if you're up here. One thing I do want to also just take a look at, guys, bear with me. This extension is just staring me at the face. I want to see what it looks like. Whew. Okay. Adds a little bit more conviction to that level up there, no? Okay, we're going to look at this as near-term support. Looks pretty good. Looks pretty good. Adds conviction of this, especially if this is going to remain the U.S. opening range low. Adds conviction trading against this on the long side for long triggers. Let's see what the 5-minute looks like. Sterling Oz. Actually, let me just bring up the trade sessions indicator here. Okay, so here's your trade sessions indicator. A quick review of how yesterday's trigger. That actually looks like a pretty decent trigger right now, guys. We want to see that 70 break in momentum in the 5-minute to get it going. You have room. Even bigger scalp than Sterling Oz, right? Than Sterling CAD, rather. You're looking at 56 pips here. So you do have the room for it. I would just want to see the U.S. opening range give out because it's only 8:30, or I guess 8:58 at this point. Listen, here's the trigger that we worked with on the break that happened in overnight trade. So there is the break of a trigger on a 5-minute chart that was very clean with the Tokyo Open. So here's the Tokyo Open. Do you see this, the opening range high? Here was the opening range high break. It happened on a break of a basic trend line. This is a 2-point, so I don't really care about it, but momentum was a 4-point or 3-point tag. 1, 2, 3. If you call that a point, okay, and there's the break. So again, offered a nice risk-to-reward ratio on the basis of a 56 pip quarterly ATR. Your first initial target on a break like this, you're looking for the Sydney highs for the opening range for Sydney. Didn't pan out till later in Tokyo session, but there was no pullbacks here to even shake you out. And then obviously the open of London trade didn't really give you a London opening range per se, so you had no play here if you didn't take that trade last night in Tokyo. But a couple of different things you want to look at. You want to be dynamic with the triggers as far as price action as well. So we're looking at momentum, but remember, this is always backwards looking, okay? So we'll use price action as well to validate those breaks. It wasn't as clean on the trigger as Sterling CAD, but certainly had a lot of opportunities to try to jump into this one as well. So we'll see what the U.S. opening range looks like. Objectively speaking, above 94, you want to be looking higher. You want to be looking to buy pullbacks, breaks of resistance. If the opening range pans out and we do stretch into 94, whatever here, guys, you get the pullback into the U.S. Open. Use that long trigger. Look for long triggers along 94 here to try to get back up into, that 95.80. 94.95, the 95 handle, and then up into 95.80 would be a 618. Looks pretty good. Remember, heading into the end of the week, one other thing I do want to note, I didn't tell you guys about the CAD, but you do have that key CPI data heading Friday from Canada. We'll have to watch what that looks like as well. especially for the sterling CAD. That might actually be a play that might give us some definitive moves here. Stefan, I will cover sterling yen for sure. That is next. Any questions on the sterling Oz trade? It looks pretty good. Again, I hardly ever take scalps while I'm here with you guys on the webinar, but that probably would have been an operative setup right there, at least near term, to try to play the opening range break even. But let's see how the U.S. Open looks. We might get a pullback here to get us back in. Okay, some questions here. Totally agree. Mark says, show the trading arrows on the live chart. Oh, I would do that, Mark, but you'll get blinded, my man. There's a lot of ins and outs. There's a lot of ins and outs. If anything, it confuses people more than it does help. Stefan says, totally agree. You are walking through the theory very well. I appreciate that, Stefan. Yeah, guys, we can definitely do this more often. I will put this on the archive page for sure. Chintan says, Mike, I find better hand in drawing MT4 charts rather than TradeStation. I want same pivot levels in MT4 that we find in TradeStation. Is that possible? Chintan, you're gonna have to contact your sales rep. I don't know MT4 that well. I haven't used MT4 in like 5 years, so you're asking the wrong guy. But I'm sure there's a way to do it. I'm sure there's a way. There's classical pivots. There's all different types of different pivot adjustments that you can do to get that to match up. I simply mean the pivot point tool for MT4. Yeah, it's a plugin. You can definitely get that, Chintan. Eileen says, after a big move like FOMC, do you tend to sit the market out the next day? Are the breaks and the moves just rebounds until it settles? So, Eileen, this is my point. I'm still kind of straying away from the dollar crosses. For me, if it's not broke, don't fix it. These levels, I mean, let's go into sterling yen. That thing's ridiculous. The trigger wasn't as clean, but the levels are just uncanny. It's like the Kiwi, which is probably, for me, just blowing my brain right now when I show you that one. That same median line formation guy, the Kiwi, has just continued to bear so much fruit. The point being, on the dollar crosses, Eileen, after event risk, yeah, I mean, like, the market tends to go through a little bit of a numb stage where the levels might not be as clean, the triggers might not be as clean. Does that mean I won't take any trades? Sometimes. Again, you know me, Eileen, I take every trade on its own merits, so I don't try to tend to fog my judgment by trying to think, oh, we just had this or we just had that. I'm looking at price action. If the trigger is there, I'm in it. If the trigger's not there, I'll sit off. That being said, I'm still not really too keen on any dollar crosses. I love the dollar yen. I was with Jamie all night last night. He was talking about this long. Beautiful, beautiful trade. I didn't partake in it, unfortunately, but this is, one of the ones where you got that major key support. We were talking about this in the webinar, guys. Remember I was kind of concerned about this 120.80, 120 region? Yeah, that gave out later in the day, slammed into 119.60, 119.65, which happens to be a lower median line parallel off the lows for the year, and a confluence with the December trend line. Okay? So, I like to call it the abomination, dollar yen, because it does really weird things sometimes, but that's, even if you didn't get on the initial stretch, you got another pullback in overnight trade and an opportunity to get long off of that key level. So it depends. It's on its own merits. Do you know what I mean, Eileen? I'm not really too crazy about trading the pound or the euro per se, but the crosses still seem fine to me, and FOMC has no bearing, or it's not gonna change my influence on what I'm looking at with those. Eileen says, I guess I just don't trust these triggers, and it's okay not to. And Eileen, there's nothing wrong with taking a step back after a major market move. The market needs to take a break, guys. Yesterday's moves were huge. Some of the quarterly the daily ATRs on those moves, guys, surpassed 300 pips. Watch this. I'm going to show you something real quick. Or 300%. Hold on one sec. So here's a quick look, guys, at what the ATRs look like yesterday at the end of the day on the back of what we saw. And this, again, this is just some nominal material, guys, for you to digest. But look, Canadian dollar, 300% of the daily ATR, 300%. Aussie, 260% of its daily ATR moved yesterday. Euro, 317% of its daily R. Pound, 360% of the daily ATR. So it's telling you if the daily ATR is 100 pips, this did 360% of what it usually does on a daily basis. And these are the nominal percentage rates in, just on a holistic basis of how it moved. So huge range. It's only natural, Eileen. You'll get things to start to simmer down. You'll get a lot of capitulation, back and forth, and whipsaw action. That's fine. You just need to know where to look, is my point for this whole conversation. And not necessarily not to trade, Eileen, but just shift your attention somewhere where, the market is not so drastic. If we look at the ATRs on this type of reference, I keep doing that, on the crosses, it won't be anywhere near this skewed. Right, so I don't have to worry about the exhaustion trade on some of those pairs. Does that make sense? Shifting attention, good idea. And 300 pips with the sterling yen. Yeah, the sterling yen is quite the beast, I must say. So here's what the daily chart looks like. This is updated on the intraday page too as well, guys. I wanted to point out on the intraday page a pretty cool thing here on sterling yen. I hope you guys were able to get what I was trying to do here. You see those two levels that we highlighted right ahead on the 17th of the FOMC print? Here's what it looked like, right? The range for yesterday went for a tag of both of them. For both of them. So you went right into the support barrier, well below the 200-day moving average. Reverse went right into the top side of the resistance barrier. Let me snap that line so it's there. There we go. There's that upper median line parallel, former upper median line parallel. We pivoted off it multiple times, but do you see that? So a trade where it reinforced the broader key range that we're trading within. Mark, I did. Are you familiar with that software? He says, off topic, but did you draw that with Snagit? Yeah, it's an awesome, actually, tool for grabbing charts and adding different graphics on it. Good eye, man. But you can see what I'm talking about. The range hit both sides of the extremes, the upper median line parallel, and then again that basic trend line support. My point being, it reinforces the range that we're looking at. The major key support coming into the week and coming into the risk was 78.40. We talked about that, not just on account of the S1 pivot, but again, the outside reversal close day, okay, and some of those close highs that we made back in September of last year. So on the scalp, where we are from now, I'm still focused on 80.25, 80.15. That's the level to beat to get the upside in focus. This is what I wanted to show you as far as sterling yen. So we went over two pairs, guys, that gave us beautiful setups. Sterling Oz, sterling CAD. Nice, clean, hardcore triggers. What happened here in sterling yen yesterday? A little bit of a fake out. Not surprised, the yen, but here's what it looked like. So this looks like it's continuing to travel off a little bit here, guys. Again, use some caution. We're just opening the U.S. range. I wouldn't be surprised to get this thing pulled back again, but we are broadly looking higher. Sterling yen look like this. So I want to show you an example of where it didn't work, right? We're not going to talk all rosy, everything's always good, we're always making money on every trade. No, we're going to take losses, and this is one where I would have definitely been on the losing trade. It was a clear-cut support trigger that gave out. This would have had me on the short side of the trade. Now, if we were nimble enough, we're looking for 43 pips, you actually would have barely squeezed it out. Post the trigger break, this would have been the actual operative that put me in at 79.20. You would have squeezed out barely 43 pips. So if you take a step back, guys, on an ideal static environment, yeah, you would have gotten the 43 pip scalp out of this. But the way this looked, I probably would have still been sitting in it, okay? And the reason is because it went to oversold territory, and that was the first oversold 30 break, or the first oversold reading we got in RSI, essentially the deepest of the week. And a lot of times that's when the market starts to pick up, the move starts to gain steam. This is a trigger that would have got me a little bit more concerned, probably putting my stops at break even with the break back above 30. And then obviously, if you bring in the trade sessions indicator, guys, Once we invalidated the break of the Sydney opening range low, that would have been the mark. Hey, this thing's probably going to see a much larger scale recovery than what we're looking for. So on a trade like this, does this move just take us out of the shorts? Probably. Would this have prompted a long? Probably not from me. Okay, why? There's no invalidation of any opening ranges. Yes, 50 in and of itself can be a trigger, but you've traveled so far off the low at this point, and you're nowhere near, even the Tokyo or the Sydney highs for the session. It would have had me a little bit more concerned on trying to jump on the long position. Just trying to walk you through the process here, guys. But it's not always going to be a clear-cut picture. Sometimes you're going to have to double back. Sometimes you're going to have to jump out of the position early because the market just doesn't have enough steam to hold the trend. And on a trade like this, you're going to want to be just very mindful of the range that we're in. In my mind, I just want to see 180 break to the upside, 180.20, before I start to go full-hearted on the long side of the trade. And by the way, guys, right, there's that sliding parallel in the key slope region that we've pivoted on already 5 times or 4 times, once, twice, 3, 4, break, instant resistance, resistance, resistance. That's the level to beat. Okay? Topside pop there, like I said, you're looking for 180.90, you're looking for 181. Questions? Mark says, great, gonna get it, thanks. Hey, more than welcome, Mark. Brian says, hey, Mike, where did you get the percent range chart? Which chart are you talking about, Brian? Oh, Brian, you're talking about, I know you're talking about the percentage ATR for the day. That's actually an Excel sheet that I made. I download the data from Bloomberg, and it's not somewhere you can get it, Brian. But let me know whenever you want to look at it. I can always bring that up for you. It's just an Excel sheet that I made. All right. He says, nice one. Cool. You're more than welcome, man. All right. So that's the sterling yen. I just kind of wanted to walk you through an interesting setup there. Still 180 is going to be the level to beat, 180.25. Kiwi. My man, the Kiwi. Wow. Somehow the word technical clarity just doesn't do it justice. Let me zoom out real quick. So I'm not sure if you guys really need me to talk on this one. I think I could just kind of put this chart here and just sit back and let you guys make the assumptions. It doesn't get much cleaner than this. Key support region that we highlighted yesterday in the intraday page, or the key resistance region rather, of this highlighted zone between the upper median line parallel off the highs and this sliding parallel here off the highs that we made in February, gave us a nice cushion of area of resistance that has already caught major highs, namely the March high that we put in right here before the collapse, and then the high that we ran into on FOMC. A proposed pitchfork off the low that I added here yesterday in the report is now coming in as support after having caught the high almost to the pip on even the stretch here. And remember, starting the week, this is the support region that we were talking about. This same zone. I'm sure you guys are sick of hearing me say this already. Right? Look how many reversals. That's caught. Top side. You got to slam right back. In fact, this is like a swing trader's dream too. Even aside from the scalp side of things. So, long story short, you're at support. Excuse me. 73, 75, this zone right here. Okay. Near-term support. This is just basic trend line, median line here off the highs from February 18th. And this is just a real near-term proposed pitchfork off the low. I don't want to put emphasis on this, guys, and anytime you see a dashed pitchfork in one of my charts, it suggests that it's something I'm looking at as a reference, not necessarily as guidance yet. If we see markets start to react to that level, or we start to get some rebounds or clear conviction breakthroughs, then I'll solidify it as something that we're definitely tracking. But right now, there's just not enough, there's not enough clear-cut rebounds off this level to give me the conviction that I'm necessarily going to follow this. So near term, I am looking for support here. I'll bet you anything, if we tack on a quick retracement, there will be something in that zone to the degree of the 50 or the 618 maybe. Ah, there's the 618. Beautiful. Absolutely beautiful. And the 786 comes in right at a level that we're watching already, 73.30, which has been highlighted before. I actually removed the 6-minute extension off that level yesterday, so just to reinforce that. That's what we're looking at with Kiwi dollar. All right, a downside break. What are we looking for? Probably drop into 73.30. If not, right back into that same sliding parallel region. That could take you right back as low as 72.70 again. I don't know. Near term, we're at support. You have a support trigger and momentum that's waiting as we open up the U.S. session. The U.S. session opening range high so far comes in at 73.90. We'll call it 74. If the session sets up like this, guys, and you see a topside break, there might be a scalp opportunity against this low for a run back into 74.45. If the U.S. opening range sets up over here and we see a downside break with a momentum break in RSI, we'll look for that drop into 73.30. So I think this one that's primed here for the U.S. Open. A dollar cross nonetheless. I'm not too keen on getting aggressive on the dollar crosses, but again, every trade on its own merits. And here's what we're looking at near term with Kiwi dollar. Any questions on Kiwi and where we stand on this pair? To go a little bit along with your comment earlier, Eileen, about wanting to sit back or being a little bit hesitant on the back of some of these moves, this is where you want to cherry pick, right? You want to take your time and let the setup happen. We don't have any major assumptions, and this is where near-term trading benefits us. I don't have to take a stance on a pair where I'm looking for 100 or 200 pip spread. I don't have to take a stance on a pair where I have to look, to be in the position for, a day or two, and I have to worry about, is the market exhausted? We're quick, right? So we have that flexibility, and this is kind of where the strategy shines a little bit in times of uncertainty like this, where you don't want to necessarily take a longer-term opinion on a pair. So this is the Kiwi dollar. Questions on that? Flexibility is operative. Amen. Right on. Completely agree. Last but not least, any gold traders in the house? $11.50. We've been talking $11.50 for weeks, maybe even months at this point. And the rebound that we saw yesterday, obviously on the back of dollar weakness, but completes a massive key outside week reversal for gold at the lows. Does that necessarily mean we're going into 1236? No, but it reinforces this major key support that we've been looking at for some time. As a disclaimer, I am expecting a break. I am expecting further weakness in gold. Near term, I'm cautious on any short exposure past 1150. Here's what the live charts look like for the gold trade. Eileen says, can you walk through a 5-minute entry for Kiwi? Yeah, we can do that. What time is it? Yeah, we got some time. Here, let's do that real quick. Here's the Kiwi setup. Here's what the Kiwi daily 30-minute looks like. I'm going to tack on that retracement to get that 618 in view. Okay. I'll bring up RSI. By the way, if you guys are going to go get this indicator, you can also get an indicator from FX Codebase called RSI2. It's pretty cool. It adds the 60 and 40 levels for you, and it also auto-scales the oscillator, so it makes it a little bit easier when you're doing your analysis. That's called RSI2 on fxcodebase.com. This was actually a beautiful trigger last night right there. 6 in the morning here. I probably could have caught this one this morning. Okay, that's a beautiful trigger right there, guys. Momentum break. This actually, the oscillator dipped below 50 and the same time it broke this trend line. It wasn't necessarily an opening range break. Still would have prompted action. It's a really good risk-to-reward ratio. Okay. Okay, so you have some divergence into the lows as price is coming into support. But on the oscillator on the 30-minute, the momentum signature is right at 40. Do you see that? So you have the clear-cut conviction against 73.75, 73.70, any way you slice it. You see a 40 break here, Dunsky, if this thing moves below that region. You see a trigger break here, Dunsky, if this thing moves below that region, it's gonna keep going. So keep those levels in mind so you know as soon as the market moves whether it's something that's validating your bias or whether it's something that is giving you further conviction. Those are the triggers I'd be looking at, to be honest with you, Eileen. That's a 3-point trigger there on the upside. There's a 2-point trigger on the short, which I'm not really crazy about, but with the fact that this is such a major key region, a break below that would have me looking down towards 73.30. Remember, a quarter of the daily ATR is about 28 pips on this one, so not going to be a 50, 60 pip range scalp that we've been looking at on the crosses, but nonetheless, the levels are just uncannily clean, guys. You don't get dollar crosses giving you moves like this quite as clear, right? Boom, boom, boom. I mean, this thing's like checkers. Eileen, does that help? She says, cool, thanks. All right. Tuttle saying Kiwi Yen 30-minute RSI break, retest and divergence on the 5-minute. Kiwi Yen. Interesting. I'm not a fan of Kiwi Yen right now, just because of the divergence in price action. You're seeing Kiwi come off pretty hard, and that's Kiwi weakness. And dollar yen rally, that's yen weakness. So I'm not really sure what I should be expecting from Kiwi Yen. Let's take a look. We'll put something on the scratch on the board here real quick for Tuttle. Here's the weekly opening range. I don't see divergence, okay? Remember, we're looking at the close, so I don't see divergence here. Let me bring it into a 5-minute. Maybe that's what you're looking at. Yeah, Tuttle, I don't see divergence here, man. You're going to want to be a little bit more careful with that. We're not looking at the wicks, right? We have to be seeing close. The close needs to be lower. That's not a lower close, right? If this pushed a little bit deeper, that would have been clear-cut divergence. Let me see if this 5-minute trigger actually lines up. So the trigger break here was here. And even that yielded a little bit of a bounce here. Not much, 65 off 40. It's only about 25 pips. You might have squeezed it out. But I wouldn't, there's not anything of a level down there that would have had me looking higher yet. A little bit different. I'm not really sure I'm crazy about it. Tuttle. He says, I'm using the default 14, and see divergence in the 5. Let me see if you see it there. I just want to make sure we're looking at the right thing. Yeah, so it doesn't matter which time frame you use, Tuttle, because, again, my man, the low didn't register, right? You need a new low in price to get the divergence. So I wouldn't necessarily say that that's a conviction scalp just yet. Interesting pair, just dynamically, from what the divergence is that they're doing in price action in and of themselves today, doesn't necessarily prompt confidence in the directional bias near term. Hey, Anthony, great to see you. He says, hi, Mike, I'm short Euro key. Hey, Tyler, you're more than welcome, man. Great to see you in the room, by the way. Feel free to let me know what other pairs you're looking at. Euro key looks interesting here. Again, though, guys, keep the relative performance of each in mind, right? You're looking at a day. I mean, I'm just going to bring it up so you guys can see it, but here's the relative performance. Again, you're looking at a day where the Euro and the Kiwi are amongst the weakest on the block. So it's not that I use this too strongly. I heard a discussion you guys were having with Jamie earlier on Twitter today about someone was saying, who was that? That, they... Mark, I think it was you that you tend to weigh a little bit more on correlations and try to make those connections. I don't want you guys to fall in that habit, but at the same time, on a scalp basis, If we're choosing the two weakest currencies and trying to bid them against each other on a scalp, it's not going to be your best interest, period. I'm not saying to use that necessarily as your analysis, but it should help you point in the right direction. So, Anthony, I don't want to dissuade you. If you're in the position on Euro Key, kind of tell me what you were looking for here, because I have us kind of in capitulation or consolidation, and in fact, it looks like a long trigger might have just given out, or it might look to give out. Watch that. If that gives out to the upside, you probably see another test of the opening range high. Okay, and this is a conviction divergence signal, guys. This is conviction divergence. Price action much lower low. Oscillator continued to make higher lows all the way to a trigger break. And even that trigger break didn't see a test of the divergent low. That's something that's a tell for me. So take it for what it's worth, Anthony, there. Watch that support. Again, the opening. Okay, so there's something that I like to call opening range reversals, and I don't want to stress that here because we're running late into the webinar, but it's just a quick concept, guys. So if the opening range for each session continues to break into one directional bias, there's going to become a point where there's one session where the opening range is clearly broken and then recouped right back into the highs, and that's, from what it looks like preliminarily, what we're doing here with the London range. You see this green range here? So the London range opened up, was pretty wide. You saw the break of the London open low. Once that gave out, you registered a new low, and then you tested the opening range high again. So it adds emphasis to a break above 44.65, the London open, for what I call an opening range reversal. And in that case, you're essentially shifting your bias back to the upside. Also, one thing I do want to note here, Anthony, is that you do have momentum coming into that 40 level and holding. So on a break above this trigger after multiple 40 holds, that's also conviction near-term reversal and momentum. So I hope that offers some clarity. He says, I was looking for today's low on the basis of Kiwi data. So here's what the Kiwi docket looks like. Oops. Later today. Consumer confidence, advertising. I don't necessarily think that's going to be a major market mover. You're probably... Yeah, the leading index 10 o'clock. That could give us a little bit of a pop in the Fed Business Outlook survey, but I don't think that this New Zealand data is going to necessarily be something that's going to be a major market mover here, Anthony. So just take that into consideration, okay? If the momentum turns over ahead of that trigger and the 40 break happens, you're basically looking for a break of that trend line right there in the opening range low for Asia, or London rather, excuse me, in green. But I'd be mindful of a possible trigger break there after holding 40. Hey, man, you're more than welcome. I hope that offers some clarity on that. All right, so I think we've covered everything here. As far as gold, I kind of just breezed over that. But, guys, I mean, look, the rebound is still going to be, the focus is on above 1150. I'm not going to get short on this thing. This is actually a nice region I was looking for on the overnight trade. We just failed ahead of it. 1181, if you guys remember, we choked this down a little bit. It was a little bit higher earlier in the week based on the slope of this decline off the highs from January. But now that decline matches the 236 dead on at 1181. So it's something that we'll be looking for as resistance, and certainly the near-term bearish invalidation level here for gold on the upside. If that breaks 1181, we'll be expecting a move into 1197, 1195. Key support still 1150, and again, the weekly chart speaks volume of the critical nature of that key support there in gold. Now having completed, well, not completed, the week is still in play, but now on the onset of a key outside week reversal, okay, at the lows. So last time we saw that, by the way, was right here, and that charged to bounce into the highs that we made early this year. So word for caution, the broader outlook still remains weighed to the downside. I think the fact that the Fed reduced its inflationary expectations may offer this a little bit of alleviation too. Might not necessarily rally, but I don't think you're going to see the precipitous decline really persist at these levels well above 1150, 1137. That's really the level that you need to get through to open up targets sub 1100. All right, guys, that's going to wrap it up for today. Thanks for the class. See you next week, says Eileen. I appreciate that. Guys, don't forget, today Jamie will be on later in the afternoon for his midweek strategy session. That's going to take place at 1 o'clock. We'll have that right here. We'll go over all those swing setups, and Jamie's got some beautiful charts also to share with you guys. So Tuttle says, was looking for the pullback to the top of the opening range for Sterling Oz. Good entry? Let me take a quick look before we leave. Listen, if it pulls back, like I said, same game plan, nothing's changed. If it pulls back and it holds 94 into the opening range of the U.S. and that breaks to the upside, I'm still liking the rally to 95. If we break to the downside, I really wouldn't necessarily be interested in shorts unless we clear that same pivot region, Tuttle. Okay, so the same region that we've been talking about as resistance, we've been selling against on the break here. It's what shifts our bias to the upside. The only thing that would put me back on a comfortable short would be a break below this. So just keep that for what it's worth. Look for the U.S. opening range to clear that out. Hey, Tuttle, I appreciate that, man. Anytime. Have a great weekend. Pooja, wish you all the best. I will see you bright and early on Monday morning. Don't forget public webinar and daily FX for the broader masses. And then we'll be back here on SB on Tuesday. Best of luck trading, guys. Cheers.